Intel and Teladoc. So neither of these had very good earnings reports. Intel fell 8% on the news. It was down on the day. Teladoc was up on the day by about 7% and then fell back about 24%. So in the case of Intel, it posted 15.32 billion in revenue, which was a miss, aiming at 17, just under 18 basically, and 22% lower than last year. 29 cents in earnings as opposed to what was supposed to be 70 cents in earnings. So it was quite a big miss and down 76% from last year. Teladoc, 592 million in revenue, was higher than anticipated and 18% higher than last year. Then posted a 44-cent loss compared to a 64-cent loss anticipated, which was, of course, lower than last year. Lots going on with these two. Here's the reason I like them, and I like to look at them, because I'm still very much at a kind of early stage in my investing and thinking about businesses. And I think what I'm reminded of here is that for any stock you like, and it can be Intel, or it can be Teladoc, or it can be Apple, or it can be Mercado Libre, or it can be whatever, if you take someone who idiotically says it's going up and someone who idiotically says it's going down, one of them going to be right, and that doesn't make them clever in either particular way. So I've heard over the last year or so, and perhaps a little bit more than that, various ridiculous reasons for thinking that Intel is going to be great, various ridiculous reasons for thinking Intel is going to be terrible, various ridiculous reasons for thinking that Teladoc is going to be amazing, and various absurd reasons for thinking it's a disaster. And I get the impression that what I'm sort of seeing at the moment is a little bit of self-selecting out in this market. So the people who said, see, they're terrible on both sides, even if they're completely wrong about the reasons why, in some cases, these things have done really, really badly at the business level, all of a sudden they're feeling incredibly pleased with themselves. And the Intel story in particular is one that kind of catches my eye. That's not to say there aren't people with very good and very interesting and very important things to say about these things, but I am reminded of the idea here of, look, if you take the up and I take the down, one of us is going to be right next week when we come back to check out this stock. And it doesn't really matter what stock we take, basically. If I say long everything and you say short everything, you're going to be right sometimes and I'm going to be right sometimes. And it doesn't mean any of us had any insight into anything whatsoever. Your thoughts here, Steve? Either of these?
Yeah, so I've listened to the Teladoc earnings call. I always listen to the Teladoc earnings call. I think it's an interesting kind of call. They do give some pretty good insights into just really how the employment figures are looking. Really, TDoc needs a strong job economy, especially at big tech, because they're the kinds of companies that will employ a TDoc services. I didn't think it was the worst report in the world. The stuff that I wanted to see it looked okay to me. There was a beat on consensus on revenues, a beat on consensus on gross profit, a beat on consensus on gross margin, a beat on adjusted EBITDA. It looked okay to me. The issue I had with it was the same issue that we had last time. There was that huge write-down of Livongo, which just sort of reaffirmed to everybody that TDoc has been a particularly bad acquirer recently. And I think that's the vast majority of the reason that it went down, plus its guidance. It did reaffirm its guidance, but it said that we're going to be on the very low end of it. So I worry about Teladoc because I think it's a fair weather economy stock. I wonder that the amount of layoffs we're seeing at the moment is only going to accelerate, and if layoffs accelerate, then I can't see how Teladoc gets anywhere near its guidance. Intel was a shit show. I just did not expect it to be anything like this. I mean, just pulling up its consensus, it missed on revenue by 15%. It missed on data center by 24%. It missed on client computing by 12.5%. It beat on Mobileye by 11%, but they want to bin that off. It missed on gross profit by 25.1%. It missed on operating income, Steve, by nearly 60%. So the minute I saw this, I thought, well, how come they haven't told anybody this was going to happen? Do you know what I mean? Like, when your results are this bad, they have a duty to tell the shareholder that our results are going to be a little bit soft, and this is why. So I thought, right, I'm listening to the earnings call because somebody will bring that up. And to my surprise, Bank of America analyst and director Vivek Arya, he said, why didn't Intel feel like pre-announcing such a huge miss to their shareholders, particularly in the data center catalog? To which Pat Gelsinger talked for 5 minutes about how Intel had been helping customers with their inventory. Then and another member of the staff talked for 5 minutes about inventory. And then they passed back to Vivek, who was about to ask, that hasn't answered my question, could you please answer the question? And they cut him off and moved on to the next person. It was absolutely awful. And Intel, to me, is uninvestable at these rates. This looks dreadful.
Interesting. So, thoughts on both of these two then, I guess, in my case. So, Teladoc, you mentioned you didn't think it was the worst earnings report in the world. I was going to ask you, do you think it's the second worst behind Intel? Because I didn't think it was that good either. They are busy doing what they did last quarter. Last quarter, their stock got hammered by about, I haven't looked the exact number up here, 40-ish% after earnings because they had a massive goodwill impairment on their acquisition of Livongo. They had another goodwill impairment of about half the size of the previous one. I think they wrote down about 6 billion before and 3 billion this time.
That's
I
right,
could
yeah.
be right about that. But
7 and 3, I think it was.
7 and 3, sorry. So just under half in that case, and their stock took another whack for about 20-something%. I was watching Brian Stoffel, who of Brian and Brian fame. His video on this said he very much views this as not a real loss. That's up for debate, I think, in a certain kind of way. So what's happened is they bought Livongo for a certain amount. Livongo only has a certain amount of value on its balance sheet, so the difference between what they paid for it and what Livongo has in terms of assets becomes written on Teladoc's balance sheet as what's called goodwill. And if the transaction turns out to be kind of worth the amount they paid for it, that goodwill stays there, and as it gradually proves to be that the case they overpaid, it gets written down. So what this is in, I think, fairly objective terms. I'm always wary of people using the word objective and then offering their view on stuff. But I think objectively what it is a way of saying that the Livongo thing has not turned out to provide the value to match the price that they paid for it. So what it is an admission that a lot of money went out of the business that realistically hasn't worked up till now. But it's not the case that any money's gone out of the business this quarter on the basis of that Livongo deal, for what it's worth. So, if you were someone who was buying Teladoc because you thought it was trading at just under its book value, even though a lot of that book value is goodwill, bad news for you, a lot of that book value just disappeared. If you're the kind of person who thought this is going to generate all kinds of cash for me in the future, maybe less good news for you. Depends a little bit. There might be other things to worry about on that side, for what it's worth. They have two kind of growth vectors here, which are their kind of mental health stuff and their kind of chronic care stuff, and they're now starting to talk about other companies which they don't even think are profitable coming in and trying to muscle in on their territory. And that's a worry, because unprofitable competitors just ruin the market for everybody. Mostly Amazon does it to other people, but if that's happening to your company, bad sign. But the goodwill stuff by itself isn't much of a worry. Yeah.
You could lump Amazon in with the unprofitable growth companies, couldn't you?
Yeah. Damodaran said he doesn't know what kind of... I feel like I'm quoting Damodaran a lot today, but he said he doesn't know what kind of business Amazon is, but he thinks it might be basically just a disruption platform, where they don't really make any money at all doing anything, but what they do is show up and stop anybody else making any money in that space either. So an online retailer is a good example here. And he says, look, basically, if you run a business, go to bed every night and pray to God Amazon doesn't show up with their version of something on your turf, because they might not make much money from it, but you sure as hell won't either. And that's kind of what you need to worry about here if you're Teladoc, I think. You need to worry about not so much, is any of this competition going to make any money? The question is, are we going to make any damn money?
Yeah, and that's key, isn't it? The thing is that we've said before on this podcast that just because you think you found a hot sector doesn't necessarily mean that any of the companies in there will prove to be the ones that actually dominate that sector. There could be other companies that come along and do it in the future. Teladoc have got a point with these VC-backed companies coming in and stealing the dinner. The point I would say to that is, in a downturn where people don't want as much health insurance, the VC companies aren't going to be lending to these health platforms. So the likelihood is that these VC companies will eventually go away or be acquired or merge or become part of something else. The issue with that is that in a downturn, Teladoc is just as exposed because it's got about 800 million in cash. It could quite quickly burn through that if it's not getting the revenue and what have you through the door. It could just be a dodgy sector, which leads you to think, well, this needs a company behind it. If they're not in fair weather economy, this needs a company behind it who are going to bankroll it. And I look at these health companies, these United Healths and things like that, and just think, God, at 6 billion, Teladoc is doing what, 2 billion in revenue, and somewhere like United Health could just shuffle their whole user base onto it, and then they could extract so much value from it. I wonder how closely they're looking at this Teladoc constantly falling in price now. And I also wonder how much of it is constantly falling in price just because people absolutely hate Cathy Wood. Like, the minute Teladoc goes down, the amount of people who aren't saying, oh, poor Teladoc, they're going, yeah, take that, Cathy. Do you know what I mean? Like, people seem to properly hate her. I mean, you see it on the Discord as much as anything, but I don't know. I don't know what to do with Teladoc. It's a strange old stock. I've done my sermon on the mountain enough times. I don't feel like we need to go over its good points. I think it's got plenty of good points. It's just a tricky time to be a Teladoc shareholder, I think.
It is, yeah, and you need to think about whether that money you have tied up in Teladoc could be used more efficiently elsewhere. I mean, the answer is almost certainly yes. The question is whether you can work out where it can be used more efficiently elsewhere. I mean, to say the answer is no is to say it's the best stock on the market right now, which is almost certainly false just statistically. Because Intel, by the way, just on that one quickly, this fascinates me, Intel. There was a time a couple of years ago where it was beloved by a certain type of investor who we'll call me, because it had really strong cash flows and traded at a really low valuation. And okay, it was kind of boring, but it bought back some stock and it did some stuff. And I think Sven is fond of it for this reason, for what it's worth. And everybody said about who liked Intel, oh, but look at AMD, it has a massive PE, it doesn't make any money. And everyone else said but growth, so on and so forth. And now the tables have kind of turned somewhat, because Intel, as you can see, is making nearly no money. It's posted negative free cash flow for the year, so there goes that kind of dividend-y buyback story for the time being. It doesn't have strong cash flows anymore. It trades, it's guiding, for $2.30 in EPS. That implies a forward PE of about 17, which isn't massively cheap. But now, all of a sudden, all the Intel shareholders that I'm speaking to are saying, oh, but growth and so on. And look at all the stuff that we'll do in the future. The story seems to have very much switched itself around. And it seems to somehow be still attracting the same kind of investor who previously said, oh, but I like cash flows and I like money now. Okay, fine, that's a way to think about things. And now all of a sudden they're very happy with the idea of no money in 3 years' time. So I'm sort of bewildered by this a little bit from Intel.
It's hopium, isn't it? I think people are looking at Taiwan Semiconductor and thinking, oh, we could be that. But the problem is that Taiwan Semiconductor is already that, and it's spending more money than Intel to be better than that. So I can't see people wanting, especially if Intel wants to stay in the actual design part, I can't see companies like Nvidia and AMD really wanting to ship their designs to Intel to get them made, especially if they have a product that they think is better than something Intel has. I mean, TSMC are even opening up fabs in America just to try and counter that Intel issue. If you think it's a domestic issue, TSMC are doing the same thing. So, yeah, we've long thought Intel only looks cheap while it's doing okay. I mean, that's true of everything, isn't it? And now it looks. I mean, I would never pay 17 times earnings for Intel. I think that's joke territory.
Yeah, it's a strange one. Part of the argument for Intel was always, but it has a bigger kind of R&D or CapEx budget than AMD. And that's actually a pretty good argument from what I can see of it, right? If you're able to spend more than your competition, that does give you an advantage. The trouble is that seems to now work the other way around, in that TSMC has Intel covered quite easily, I think, in terms of kind of CapEx that they're spending on this. And look, that's not a decisive advantage. Intel still managed to get absolutely mullered by AMD with a much bigger CapEx budget than them. But that advantage that they once had is now their disadvantage to try and make up. So, I don't know. Maybe there comes a point where this stock comes cheap enough. Chris Hill was positive on it when we spoke to him.